Tesla stock seems to be overreacting to some bad news. US auto safety regulators said they have opened an investigation into 280,000 new Tesla Model 3 and Model Y vehicles over reports of loss of steering control and power steering. NHTSA opened a preliminary evaluation after it received 12 complaints from owners of 2023 Tesla Model 3 and Model Y vehicles. One Model 3 driver reported in May the car's steering felt stuck and it slid off the road, which resulted in crashing into a tree. So it seems like there is one crash, but there doesn't seem to be any more crashes than this one. Here's another incident. Wheel jerked hard right and made a thud, and the screen warned that steering assist was reduced and displayed an error code. He also said that Tesla told him this is a recently known issue and noted the steering rack might be replaced entirely. There seems to be a possibility that Tesla will need to do a recall here, but it is still too early to tell. This could be nothing. You always have some defective vehicles. The question is this widespread? And we don't know about that yet. But it does appear that out of these 12 complaints, many of these vehicles are pretty new. For example, this one was just 30 days old, so it is not a wear and tear issue. While this is certainly not good news, I am not worried about this at all as a long-term Tesla stock investor, because Tesla makes cars, and cars inevitably at some point will have recalls. That is inevitable. It's just a matter of time. If this ends up being a recall, as a long-term investor, I don't see a problem at all, because I expect some recalls in the future. As far as I can tell, this was the main thing that drove Tesla stock down today. I think this is a severe overreaction to a very little tiny thing in the long term. A US Senator, John Cornyn, just visited Giga, Texas today, and he spoke with Elon as well. Politicians being friendly with Tesla, I think, is a good thing. I would just hope that both parties can be friendly to Tesla. I'm strictly speaking as a Tesla stock investor here. Tesla has just basically increased pricing for Tesla vehicles in the US by increasing interest rates. For example, if you get a 72-month financing option, instead of paying 5.89%, you will now pay 6.09%. So not a big change, but still, some people will feel it a little bit. Hopefully, the Fed does not raise the interest rates anymore. Otherwise, we will see higher interest rates for purchasing Teslas as well. We have new delivery numbers from China based on the insurance data, 10,600 this time. This week was significantly better than the previous week, and it's almost the same, but not quite, when we compare it to the previous quarter's same week. I say the number is pretty respectable, and clearly the delivery wave is being flattened if we compare this year to the last year. Gary also agrees with me, saying that the deliveries are pretty okay. This, I would say, is fairly good news. Tesla is seeking $100 million from the US to build 9 semi-truck charging stations along a route from the southern border of Texas to northern California. Tesla proposed each be equipped with 8 750 kilowatt chargers for Tesla semis and 4 chargers for competitor trucks. These would be permanent chargers located in these areas. Tesla would contribute $24 million to the project. Looking at this, here's what I think. I think this is designed, of course, for semis to go between Fremont, where Tesla has a factory, and they're going to go to Austin, which is somewhere up here. But also, I think this specific charger is going to be for semis to go to Tesla's factory in Mexico, which is going to be somewhere around here. I'm looking forward to the day when Tesla will only use Tesla semis to transport goods instead of using diesel-powered trucks. India proposes Tesla to follow Apple's model, pair Chinese and Indian suppliers. Jeff Lutz, who is a supply chain specialist, he says this is the same framework China demanded 20 years ago. We got some news about Tesla's latest full self-driving version update as of this evening, which was yesterday evening. We're reasonably confident that the deployment of Tesla's full self-driving beta version 11.4.6 has been paused. Further waves may still occur. However, based on the last 2 years of data, we are now past the typical longest delay between waves. There are probably a few kinks that Tesla needs to figure out first before they push out the update to more people. There is a minor update pushed to the Tesla mobile app without an actual update, a new icon to take you directly to your messages inbox right here. The superconductor breakthrough is now more likely. It is sitting at 36%. NIO just had a pretty good month, delivering over 20,000 vehicles. So how are investors reacting to this? They are selling NIO stock today, but NIO stock is up quite a bit after Volkswagen announced its big investment. Elon is giving us an update on his love about Canada. Oh, I get it now. Some people are reading the t-shirt as saying, "I love an AI." What a funny misinterpretation. This is pretty interesting, and it's sort of maybe in some ways good for Tesla as well, that Foxconn's Mobility and Harmony is thinking about building seriously in India. That would just make the whole supply chain just a little bit easier to work with if there were more automakers that make EVs in India. Ford announced today that F-150 Lightning orders have increased by 600% following the drastic price cuts last month, which were up to about $10,000. The automaker says it's now on track to triple annual production capacity by this fall to meet the higher demand. But notice how they said triple annual capacity and not actually triple production. Let's see if this demand is sustained, like we saw earlier this year for Tesla in the beginning of January when Tesla did apply these crazy huge price cuts. The order inflow increased dramatically at first and then it slowed down. Ford also said that they expect to hit its targeted annual run rate of 450,000 trucks by this fall. This is a pretty interesting chart to look at. BEV worldwide sales, Tesla versus major EU and US manufacturers. As you can see, Tesla sells about as many EVs worldwide as these huge automakers. And then Tesla versus major Chinese manufacturers. Tesla is still doing pretty well, although these Chinese manufacturers are a little bit better at making more EVs. However, remember that a lot of these are very cheap EVs, so we'll see how this number changes for Tesla once Tesla releases the next generation vehicle. We have some bullish news from the UK. The UK extends tax breaks to second-hand EVs, making them a little bit more affordable. That's good news for overall EV adoption. Kia pauses EV9 reservations in Canada as demand outpaces low supply. They only allocated 500 EV9 models though. Gary Black says this is another reason not to cut prices on existing Tesla models, referencing this chart where used Teslas are actually finally not extremely unaffordable. He says that it is better to pursue the next generation vehicle instead of cutting prices randomly to drive short-term volumes. By the way, Tesla is working on the next generation vehicle currently as fast as they possibly can, so I don't think that comment really helps Tesla. He continues here in blue, far better to take a long-term view and spend money on educating consumers why they should buy an EV. Now, if I was investing in Tesla stock with a maybe let's say a 2 to 3 year time horizon, I would have the exact same opinion. But my time horizon is about 10 years. With that, I don't necessarily want Tesla to do advertising right now and drive up the demand by a lot, because that will make it so much easier for other competitors to have higher margins. Right now they are struggling because any really sensitive consumer will always compare prices between alternative options. We can let GM and Ford and other automakers advertise about how EVs are actually better, and as a result everyone will compare them with Tesla, and then many of them will actually end up buying Tesla. So I don't think Tesla is doing anything wrong here, it's just a different strategy. Kiri is pushing back against the criticisms here. Funny that many on this board think of portfolio managers as being short-term focused, when most portfolio managers would prefer the Tesla management take a long-term approach and educate consumers with EV advertising rather than the short-term sugar high of cutting prices. If you only expect Tesla to deliver 7 or 8 million vehicles in 2030, which is what a lot of Wall Street expects, then yeah, I say Gary has a good point. But Tesla's goal is to deliver about 20 million vehicles in 2030. To do that, you do need lower prices. Gary expects Tesla to deliver about 10 million vehicles in 2030. If I only expected that little, then I would agree with Gary's point actually. Morgan Stanley has a new note which shows some interesting things about Tesla. I think you should pay attention to this one, although it's not as bad as it sounds, I think. Our summer intern class provides a window in the preferences of a future generation of business leaders and commercial influencers. Tesla's desirability among the interns fell significantly year over year to 14%, below Mercedes at 20%. Does Tesla's brand come at the sacrifice of cool? Tesla's desirability as a share of total intern preference declined to 14% from 19% last year versus over 30% in each of the 3 years prior to that. Our intern preferences largely align with our views. We believe Tesla's ubiquity will continue as the company drives down price and pushes volume, competing to be the next Toyota rather than the next Mercedes. Tesla, of course, is not trying to be some exclusive, overpriced luxury brand. Tesla wants to have vehicles that everyone can afford, so we can certainly expect more of this in the future. I haven't quite met any people that told me, you know what, my dream car is a Toyota. My dream car is a Volkswagen. But these companies sold more cars than all other companies. Preference to buy an electric vehicle declined materially year over year to 22% versus 30% in 2022, slightly below our 2030 US EV penetration forecast, which is only at 25%. So Morgan Stanley seriously thinks that in 2030, EVs will only take 25% in terms of market share. I think that's way too low. Double that number and you will be much closer to where we will actually end up, is what I believe. And YouTube says you should watch this video next, but if you haven't finished watching this Elon Musk interview, watch this one first. My name is Matt Poshius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.